Hello and welcome everybody. It's Stephen again, and I'm here today to give you an overview of what happened in the markets last week and also how our portfolio fared. Last week was an extremely eventful week, just like we've seen over the last couple of weeks, where investors are very sensitive to what is happening in terms of the bond yields. The week started off quite badly in the stock market, where the bond yields had increased. This had caused a lot of the growth stocks to sell off on Monday and Tuesday. On Wednesday was a little bit better. It started off slowly, but Jerome Powell, who's the head of the Fed, actually did a speech in which he stated that they're going to try and keep interest rates as close to zero as they possibly can until about 2023. And they were also not too concerned about inflation moving forward. They expected inflation to be slightly higher this year, but then they expected it to normal out as time passed. Whether you believe that or not is a different matter, but that was the words that came from Jerome Powell, the head of the Fed. The markets were very bullish after that speech. And actually the second half of the session on Wednesday, the stock prices actually increased on the growth stocks. Overall in the week, both the S&P 500 and the Nasdaq were slightly down overall for the week. But I'm happy to say that our portfolio fared very well, and we were about very close to, I think it's about 1% up for the week, which is very good when we consider that the market sentiment at the moment is very, very sensitive, and we've fared very well in this type of conditions. So I'm very happy with that. Some other news that actually happened in the market this week is that Joe Biden, the president of the United States, has stated that the vaccination program is going very well in the US, and they've actually rolled out the vaccination program to much more US citizens than they had initially expected in this time frame. So that's really, really kind of great news for the economy moving forward, I think. And that's why I also see that a lot of these stocks that had been brought down in price because of COVID-19 conditions, I expect them to do a little bit better moving forward. And I think that's why we've seen a rotation from growth stocks to COVID-19 sensitive stocks as the economy starts to repair itself. Oil prices also took a considerable dip this week. A lot of that was to do with the production of oil was higher than expected and anticipated. And then on the demand side, there was a lot of concerns around the increased number of cases in Europe, but also the slowdown in the vaccination program in Europe, which a lot of it was caused by the AstraZeneca drug, as there was a lot of kind of scandal around it, in the fact that many people were saying, and studies were saying, that it could potentially cause blood clots. However, the European Commission for Drugs this week gave the okay for the AstraZeneca drug to be rolled out throughout most European countries. So I'm expecting the vaccination program in Europe to speed up. And then from there, I think we can see that I'm expecting oil prices over the next few months to continually rise. As I've said before in some of these videos, I'm expecting that we have kind of a commodity super cycle, which is caused by a number of different things. But kind of on the oil side, I can see an increased demand as economies open. But also, I'm also expecting that we have a higher amount of inflation and a weakening of the dollar which should be very good for commodity prices moving forward. As I move on to our 5 best performing stocks for this week, at number 1 was a company called Hartford Financial Services. This is an insurance and financial services company based in the US, in Michigan. Actually, they had some really great news this week, where there is advanced talks between Chubb Insurance Company and Hartford Financial Services for a potential acquisition. So nothing has been set in stone or announced, but they are in discussions. And if this was to happen, this would be one of the largest deals in insurance that we've had over the last couple of years. So that caused quite a jump in the Hartford Financial Services stock, and actually sitting at about 22% up for the week. So we will keep an eye on that, but that's very good progress for one of our big stocks. Our second biggest gainer for this week, it was actually a cryptocurrency called Cardano. As everybody knows, Cardano has had an absolutely spectacular year and has done very well for our portfolio. But one of the main reasons for the rise this week in Cardano was that it was actually announced that Cardano would be listed on Coinbase, which is obviously the largest cryptocurrency exchange. As usual, just as it was before it was being announced, there was the kind of buy the rumor, but as it went to kind of get implemented, we did see a bit of a dip and a bit of a sell-off after it went live on Coinbase, but still had a very good week and actually finished over 10% up for us for the week. Our third biggest riser for the week is Calumet Oil Services. This has done very well for the week and is actually sitting at, I think it's 7.23% up for the week. So that's great news. That's done very well over the last month or two. Also Plus 500, which is a social trading platform, which is quite similar to eToro, which is listed on the UK Stock Exchange. That's done pretty well this week as well, which is sitting over 6% up for the week. And finally, in 5th place, Vista Outdoor, which has also done very well this week, sitting at over 5%. This is a kind of outdoor ammunition company. So that's done very well this week. So those are our 5 biggest gainers of the week. Very happy with what they achieved. We also saw some great news in the cryptocurrency space this week, with Chinese company Meitu, who had previously bought Bitcoin and Ethereum for their balance sheet a few weeks ago, had decided to increase that amount this week and had bought Bitcoin and Ethereum. They're taking their total holdings up to 90 million equivalent in value. This is really great to hear. It's nice to see some fresh blood, come into the cryptocurrency space in terms of, a public company. In addition to Square, MicroStrategies and Tesla, which we saw recently. We also see massive interest this year from both private and public companies, as well as hedge funds, insurance companies, and also pension funds. And I think that this will just continue to rise over the forthcoming year. I think bond yields, are still pretty low for these public companies, and I think that they need to keep pace with inflation. So I think you're going to see more and more companies put Bitcoin onto their balance sheet. That being said, although I'm very bullish on cryptocurrency and I can envision it doing very well over the coming months, as I've always said, my strategy is to reduce our cryptocurrency weightage in our portfolio. The higher the cryptocurrencies go up in price. I think this is very important for us to do, and to use that money where we trim those positions and diversify into other areas and set up our portfolio not only to excel in many different scenarios and conditions, but also protect the capital your hard-earned money. I think it's very important as part of a risk mitigation strategy. One of the new stocks that I added to our portfolio this week was a holding company called Aéroports de Paris. This is a airport holding company that actually owns and manages lots of airports throughout France and other airports in Europe. It's a very fast growing company. And also a lot of the reason why I decided to buy that was because I saw a lot of data coming out of the US that air travel was starting to increase. And although in Europe it hasn't happened yet because of, as I mentioned earlier, the slowdown in vaccinations, I'm expecting travel to pick up quite considerably towards the summer. And I think a lot of the airports, especially the major ones such as in France, I think there will be a big beneficiary of this as we see increased air traffic. So I was very excited to add that to our portfolio. I'm expecting that to do very well throughout 2021. But obviously it's going to take a little bit of time for people to, first of all, be able to travel again, but also build up the confidence to want to travel and to go on their vacations in the summer. I'm also making sure that during these sensitive times in the stock market, that I am actually hedging our portfolio very well to be able to weather all different scenarios. So this week I've been using the VIX index, which is a volatility index to help protect our portfolio. And also from time to time, depending on how the market looks on that day, I've been taking, short-term shorts on the Nasdaq in case of any dips, which kind of works as a hedge on our portfolio. I also own gold, silver, and obviously Bitcoin as well. So these are also additional hedges which also serve our portfolio well. That was just a short wrap up of what happened this week in the markets and in our portfolio. But moving ahead, I'm expecting over the next couple of weeks for us to continue to have some sensitivity in the markets, especially to do with bond yields, which may or may not affect growth stocks moving forward. But I think our portfolio is in a very good place. We've diversified our holdings as much as we possibly can into areas which I think we will see a rotation, as I said earlier, into interest rate friendly stocks, also into commodity stocks, which I see that we're going to have potential super cycle, and also into kind of COVID sensitive stocks, which we should see improve as the economies start to open up again, especially as they have quite low valuations at the moment. So that's just a wrap up from me. I thank you very much all for listening to this video. And as usual, if you have any questions, feel free to leave any comments and I'll be happy to answer them. Thank you, and I hope that we have a great week ahead.